Market impact. Market impact. Large-scale or highly publicized cases of deed fraud can undermine confidence in the local real estate market. This can lead to broader effects such as reduced property values and hesitancy among potential buyers and investors, impacting the market's overall health and growth. Undermining market confidence. Frequent or highly publicized cases of deed fraud can shake the confidence of potential buyers and investors in the real estate market. This fear can lead to hesitancy in engaging in transactions, which can stifle market activity. Effect on property values. A lack of confidence can also lead to a decrease in property values. If buyers perceive that there is a high risk of fraud, they may be less willing to invest, or they may demand lower prices to compensate for perceived risks. Broader economic effects. In regions where real estate is a significant part of the economy, widespread fraud can have ripple effects, affecting job markets, municipal revenues, and overall economic growth. An illustrative example of how deed fraud can impact the real estate market can be seen in the case of the United States versus Ayeni et al., a situation that unfolded in Chicago in the early 2000s. Here's an overview of the case and its implications. Case overview. Participants. The case involved a group of individuals, including Oluwole Ayeni, who were indicted for participating in a complex deed fraud scheme. The fraud involved forging documents to falsely claim ownership of properties that were not theirs, then selling these properties or obtaining loans against them. Method. The perpetrators targeted properties whose owners were deceased or properties that were otherwise unattended. They would forge deed documents and other legal paperwork to transfer ownership to themselves or their accomplices. Market impact. Undermining market confidence. The case was highly publicized due to its scale and the audacity of the methods used. This publicity severely undermined confidence in the security of real estate transactions in the area, particularly in neighborhoods where these fraudulent activities were concentrated. Effect on property values. Property values in affected neighborhoods suffered as the scheme contributed to a general atmosphere of distrust. Potential buyers and investors became hesitant to invest in these areas, fearing similar incidents of fraud, leading to a noticeable drop in property values. Broader economic effects. The ripple effects extended beyond the real estate market. The uncertainty and instability in property ownership discouraged new investments and development projects, which in turn affected local job markets and reduced municipal revenues from property taxes and transaction fees. Legal and regulatory response. Legal proceedings. The legal proceedings against Ayeni and his co-conspirators were extensive and involved charges of mail fraud, wire fraud, and bank fraud, highlighting the multifaceted nature of real estate fraud schemes. Regulatory changes. In response to this and similar cases, there were calls for enhanced regulatory measures, including improved verification processes for deeds and increased penalties for real estate fraud. Lessons learned. Increased vigilance. The case served as a wake-up call for real estate professionals, law enforcement agencies, and regulatory bodies, highlighting the need for increased vigilance and improved security measures in real estate transactions. Public awareness. It also emphasized the importance of public awareness campaigns to educate property owners about the risks of deed fraud and the steps they can take to protect themselves. This case exemplifies how significant the impact of deed fraud can be on a local market, affecting everything from individual property values to broader economic conditions. It underscores the importance of robust legal frameworks and vigilant enforcement to maintain trust and stability in the real estate market. Addressing the long-term implications. Enhanced security measures. Implementing and promoting advanced security measures and technologies in property transactions can help mitigate the risk of fraud. This includes blockchain and other secure digital transaction platforms that provide better traceability and security. Legal and regulatory improvements. Strengthening laws and regulations related to real estate transactions and increasing penalties for fraud can deter criminals. This also includes faster and more efficient legal processes to help victims recover their losses more promptly. Community and industry collaboration. Real estate professionals, along with community leaders and law enforcement, can work together to create more robust systems for monitoring and quickly responding to fraud. Public awareness campaigns and professional training can equip individuals with the knowledge and tools needed to prevent fraud. Addressing these long-term implications is essential for restoring trust in the real estate market, protecting the financial and professional interests of those involved, and ensuring the stability and growth of local and national economies. An illustrative example that captures the implementation of advanced security measures, legal reforms, and community collaboration in addressing real estate fraud can be seen in the landmark case involving blockchain technology in Vermont. Case example: South Burlington, Vermont. Blockchain pilot program. Background. In early 2018, the city of South Burlington, Vermont, partnered with a blockchain technology company, Propy Inc., to launch a pilot program aimed at using blockchain for recording real estate transactions. This initiative was part of a broader move to enhance the security and efficiency of property transactions, making them more transparent and less susceptible to fraud. Key developments: 1. Enhanced security measures. Blockchain implementation. South Burlington's use of blockchain allowed for a secure, immutable record of real estate transactions, significantly reducing the risk of deed fraud. Each transaction on the blockchain was encrypted, time-stamped, and easily verifiable, discouraging falsification and unauthorized changes. Digital verification. The system provided digital verification of ownership and histories, streamlining the transfer process and increasing buyer and seller confidence. 2. Legal and regulatory improvements. Supportive legal framework. Vermont had previously enacted legislation that recognized blockchain-based records as authentic under state law. This legal recognition was crucial in legitimizing the use of blockchain records for real estate. Streamlined processes. The blockchain system proposed a reduction in the need for manual checks and the potential for faster recovery and resolution in cases of fraud, as the data was readily accessible and transparent. 3. Community and industry collaboration. Stakeholder engagement. The pilot involved collaboration between technology experts, local government officials, real estate professionals, and legal advisors to ensure the system met practical and legal requirements. Public awareness and training. Ongoing efforts were made to educate the public and real estate professionals about the benefits and workings of blockchain in real estate transactions, fostering a community well-informed about fraud prevention measures. Outcome and impact. Increased trust and efficiency. The pilot program helped in enhancing trust among participants in the real estate market. The visibility of secure, unalterable transaction records made property deals more transparent, appealing to buyers, sellers, and investors. Model for other regions. South Burlington's initiative served as a model for other jurisdictions, considering similar technologies to combat real estate fraud and improve transactional security. Broader implications. Potential for widespread adoption. The success of such pilot programs demonstrates the potential for broader adoption of blockchain in real estate transactions nationwide, suggesting a future where real estate transactions can be both more secure and efficient. Legislative interest. The initiative sparked interest among legislators in other states to explore similar legal frameworks that facilitate blockchain adoption in real estate and other areas of public record. This case exemplifies how integrating modern technologies like blockchain, coupled with supportive legal environments and community involvement, can address the long-term implications of real estate fraud, safeguarding the market, and benefiting all stakeholders involved. Systemic changes and responses. The legal and financial landscape is continually evolving to better detect and prevent deed fraud. 1. Enhanced legal frameworks. In response to the challenges posed by deed fraud, Arizona may continue to update and strengthen its legal frameworks to ensure more robust protections for property owners and more severe penalties for perpetrators. 2. Technology integration. The increased use of technology in real estate transactions, such as electronic recording systems and blockchain, can help in preventing deed fraud by enhancing the security and traceability of property documents. 3. Public awareness campaigns. The state and real estate associations might invest in public education campaigns to raise awareness about the signs of deed fraud and the steps property owners can take to protect themselves. Community and legal support systems are vital in aiding victims of deed fraud in recovering from its impacts. 1. Legal aid services. Nonprofit organizations and legal aid services can provide assistance to victims who may not have the resources to engage in lengthy legal battles. These services can be crucial in helping victims navigate the legal complexities of reclaiming their property. 2. Community programs. Community-based programs can offer support and resources to those impacted by deed fraud. These might include counseling services, financial planning assistance, and educational workshops to help victims recover and protect themselves from future fraud. 3. Policy advocacy. Victims of deed fraud can become powerful voices for change, advocating for policy improvements and stronger enforcement measures to prevent similar crimes in the future. Understanding the depth and breadth of the consequences of deed fraud underscores the importance of maintaining vigilance and implementing preventative measures. For those impacted by deed fraud, it is crucial to seek immediate legal counsel to begin the process of remediation and to minimize the long-term effects of the fraud.